Hey guys, how's it going? So today I'm going to be talking about 5 stocks that I am buying from March 8th through March 12th, 2021. Alright, let's get into it. Alright guys, so before we get into the 5 stocks, just a quick portfolio update. Last couple of weeks have been kind of rough in the market, and we are actually down. So overall, you can see that the portfolio is down 10.11%. Or 10.11%, while the spider is up 0.26%. So we are actually losing right now, and we are losing by 10.36%. So that's quite a big difference from a few weeks ago. Like I think a few weeks ago we were beating the market we were getting like double the returns or something against the market, and now we're actually down quite a bit. And well, like I said earlier, I wasn't sure if that could last, and I guess I was right that time. We didn't last. But I mean, I think that these companies will actually do well in the long term. It's times like these when I'm reminded of a quote that I heard from David Gardner. I think he said something like stocks. What did he say? He said something like stock prices always go down faster than they go up, but they always go up. They always go up more than they go down. That's a good quote that I heard. So it's times like these when I uh, think of that quote. So right now they're going down pretty fast, but if you go and take a look at the chart from the long term, like over a period of 5 to 10 years, they go up quite a bit more. So I think right now it's a good time to start buying like a little extra. Like it's like the stocks are on sale right now. But yeah, anyway, let's see. For the past week, we got Square. Just a quick review. We got Square. That is down about 9.45% since we bought it. Also got Protolab. That's down by about the same percent. Also American Tower. That's down by about 2.4%. I made a few timed buys last week. One was Mercado Libre. Mercado Libre was a stock that I heard about from David Gardner's podcast maybe a few months ago, and I saw it at what was it, 1577 at the time. I think it was down from a high of about 2000, so I thought it was a pretty good deal here. I didn't get it like right at the bottom because I mean no one knows where the bottom is, right? But anyway, it's down about 6.8%. I also got some Corsair as a timed buy. I thought anything at below 35 was a good deal at the time, so I got 11 more shares. That's down about 8.5%. Right now it's at 31.84. Actually, then I did not expect it to hit that low a price. If you ask me about how low it would go like a month ago. So right now I think any deal below 35 is a good deal. So I mean, if I never had a position in Corsair, I would be buying more right now. But right now, like I think Corsair. Let's look at the percentages. We have about 6.23% of the portfolio is Corsair, so I'm good on Corsair for now. Yeah, so that was Corsair Teledoc. We also got that on the 3rd. That's also down about 8.49%. Kathy Woods also got some Teledoc for her ETF, so that's also good to know. She's also one of the people that I like to listen to. I don't agree with like everything she does, but I agree with her thoughts on Teledoc. And also for the regular scheduled buy, we got Uber. That was on the 4th. That's up about 7.57%. Pretty good so far. I think when we got it at the scheduled by 2 p.m., that was actually at the low, so we got kind of lucky on that one. And also we got Apple on the 5th. That is up 0.95%. And also for the portfolio percentages, largest holding is Mercado Libre. That's mostly because one share costs quite a bit, 1,470 right now. So that's why it's the biggest holding. If I could have gotten it in smaller chunks, I would have. I usually don't like to get that big a chunk at the start. But I mean, it was one share, so couldn't really do anything about that. Unless you're in an account that lets you do fractional shares, but I'm just pretending like I'm not allowed to buy fractional shares for this one. Yeah. So anyway, Mercado Libre, Corsair, and Match, those are the top 3 holdings. Percentages are a little above 5% there. And the smallest holdings I have are Uber, American Tower, and FRCOY, which is fast retailing. This is the company that owns Uniqlo, one of my favorite clothing stores. I'm actually going to be buying more of FRCOY later next week because I think they're going to be doing pretty good in the future, and it's only a small percentage of the portfolio right now. So yeah, that's the portfolio breakdown. Anyway, let's get into the 5 stocks I'll be getting next week. Let me escape that. So next one I'll be getting next week. This is for Monday. So Monday I'll be getting Netflix. Netflix, if you compare it to the spider, the yellow line is a spider, blue line is Netflix, as you can see here. Over the past 5 days, let's see, Netflix is down about 6%, while the spider is down 0.54%. So I think that's a good deal. I think it's a good company. And over the long term, if you zoom out to like maybe 5 years, you can see that Netflix is crushing the S&P 500. So right now, I think it's a good buy. I would buy like maybe 1 or 2 shares. I wouldn't buy a lot because it seems like the market's tanking right now and you just don't know like how low it's going to go. Like you can't tell the future. So just buy a little bit over time as time goes on and like dollar cost your way average in. So yeah, that's Monday. Monday is Netflix. Next one for Tuesday. Tuesday is Disney. If you look at that, Disney is down about 2% for the past 5 days, and the spider is down about 0.5%. For this one, it's not crushing the S&P 500 over the past 5 years. 5 years, if you look at the chart, you can see it's at about even. But the thing about Disney is they have their Disney Plus thing coming out. Well, it already came out, and seems like a lot of their customers are happy with that. So I think that Disney Plus will help drive the price up a lot in the future. So that's why I'm adding to that. Even though it's not really outperforming the market by that much right now, I think in the future it could. So yeah, that's why I'm adding more of that on Tuesday. And for Wednesday, getting Match. Match has been down, let's see, 6.11% over the past 5 days, while the spider's down 0.54. But if you look at the 5-year, you can see it's crushing the S&P 500 over the past 5 years. It's up over 1,100%, while the spider is up only 89%. So yeah, right now it looks like a good buy. I'll be getting that on Wednesday. Thursday is fast retailing, Uniqlo. That is down 11%, a little over 11%. And over the past 5 years, if you take a look at that, it's beating the S&P 500 by quite a bit. More than double the S&P 500's return. So Spider's up 89%, fast retailing 189%. So that's pretty good. That's Thursday, and then the last one is Friday. Friday I'll be getting Tncent. Tncent is down 3.39%, and the spider is down 0.54%. And if you look at the 5-year for Tncent, you can see that it's crushing the market, the S&P 500 as well. It is at, let's see, 352%, and the spider is up only 89%. So that's doing pretty well. Tencent is actually one stock that I disagree with Kathy Woods on. If any of you guys follow her and her trades, you'll know that she's been selling some of her Tencent holdings. I'm not sure why. I'm guessing that maybe it's just too big a position in her portfolio, or maybe she thinks other stocks will do better than that. But anyway, while she's selling it, I'm actually buying it. So we'll see how that turns out in the long run. I think it's going to be a good company in the next maybe 5-10 years or so. So we'll see how that goes. But yeah, just to recap, Monday is Netflix, Tuesday is Disney, Wednesday is Match, Thursday is fast retailing, and Friday is Tencent. Alright guys, so that's it for today's video, and I will see you guys in the next one. Bye.